Hello guys, it's Max here from Daily Market Movements, and today we're going to be analysing the NASDAQ 100. Unfortunately, we had a horrible close going into the weekend. On Friday, we completely capitulated here for the NASDAQ 100, ending down 3%. I think the day prior, so on Thursday, we ended up down around 1.5, maybe 2%. So we've fallen from those swing highs. We did briefly, for a second time, break above the 200-day EMA, and I kind of did warn that just because we had that daily close above the 200-day EMA, it didn't mean that we were out of the woods, because previously when we closed towards the upside of that 200-day EMA, what happened? We had Facebook earnings, which of course sent us a lot lower. So it's kind of played out again, but this time around it's even worse. And it looks to me at this moment in time that we are very likely to go and retest those swing lows. I think that this W pattern that I had mentioned in previous weeks is about to form itself, where we get that double bottom. But typically speaking, medium to longer term, W bottoms are very, very bullish for the market. It's a very bullish stock pattern that forms, and I think medium to longer term, once all this short term turbulence has passed, it will be good for the NASDAQ 100. Of course, if you're trading on leverage and you're a short-term trader and you're day trading this, then please do be very, very cautious, because I still believe this has a long way to go yet. That being said, it all depends on Ukraine and Russia. You're probably wondering, why have we fallen 3% going into the weekend? And of course, we had some comments from some Fed members yesterday and on Thursday, saying that they definitely favour a 50-point rate hike rather than a 0.25. So that's the Fed members becoming much more hawkish, and that was due to that inflation figure that come out, the CPI figure that come out on Thursday, which was a lot hotter than expected. And that's just because of crude oil. Crude oil is representing the majority of that inflation increase. It's not really the price of goods that's carrying that number higher. But I don't know if you all saw it yesterday. Let's just go and have a look at the crude oil chart. We traded from $89 all the way up to $94 on the swing high, and of course that's just not good for inflation. The higher that crude oil goes, the higher that the inflation number becomes. And if we do get an invasion from Russia onto the Ukrainian border, that would not be good. That would send the crude oil market skyrocketing higher. Some analysts are calling for 120. I think the highest estimate is $150 a barrel. Now that obviously represents a 50% increase, or about a 60% increase from current levels for crude oil, and that's just going to make the inflation number even worse, and the Fed's then just going to have to become even more hawkish in the short term. And with the Fed becoming that hawkish to try and bring inflation down, that could potentially spark a recession. So there's many worries in the market at this moment in time. It's very complicated, but everything's very well correlated. And the Fed really have got their work out, and they've now just called for a emergency meeting on Monday. So the likelihood is that there will be a rate hike on Monday. That's what I am kind of anticipating, or maybe a rate hike coming next week at some point. I think it's welcomed, whether it be 50 points or 25. We will soon find out. What you might see is a 25-point rate hike on Monday, and then when the actual meeting comes in on March, the meeting that's been scheduled now for some time, when that Fed minutes meeting comes out, there might be another 25-point rate hike, making it 50 in total. But time will tell. It'll be very interesting next week. I do expect some more volatility. The markets are going to be very, very volatile over the next couple of weeks, especially with regards to Ukraine and Russia. And we have now re-entered that volatility box that I kind of drew a few weeks ago. As long as we are trading within this box, the markets are going to continue to be volatile, and I'm not going to be super bullish on the NASDAQ 100 until we do get several daily closes above the 200-day EMA. But one thing I do not like at this moment in time is that the 50-day EMA looks to form a death cross here at this moment in time. We've got the 200-day EMA trading at around 15,000, and that 50-day EMA is falling down sharply. And if we do get that death cross, that of course medium long term projects a bearish movement here for the NASDAQ 100. So I'm keeping my eyes on that death cross. And that is going to wrap it up for today's video. But just before I let you leave, I just want to quickly show you our brand new streaming service. We've recently launched this website that you can see in front of you. This is where we provide in-depth analysis videos as well as trading signals via our Telegram group chat. Once subscribed, you'll then have access to all of our in-depth analysis videos as well as access to our private Telegram group chat. We cover various markets such as commodities, US stocks, indices, and cryptocurrencies. We also have a video category where we provide educational content so that you can improve your trading skills. If this sounds appealing to you, then you can find our website link in the description of this YouTube video at dailymarketmovements.com. If not, then I would just like to take this time to say thank you for watching today's YouTube video. Please give my channel a subscribe and give this video a thumbs up. Thank you very much, and I hope to see you again soon.